Gary, thanks a million for being here today.
Oh, it's terrific to be with you, Jeff.
I'm just going to ask you a series of questions, and really what I want to do is to create a kind of introduction to the world of cryptocurrencies and the technology that is being used basically to support it, the blockchain technology. But before we start, what I wanted to do is really ask you a personal question. I have known you as a high-level government official in the Treasury and the CFTC, and now you have gone to MIT and you're really deep into the world of cryptocurrencies and blockchain. And I just wondered if you could give us a little insight into your thinking about the relationship between that public policy experience and also what you're doing now. And I should also say that I didn't know you then, but you had a long career at Goldman Sachs as well. So maybe I should say the world of investment banking, the world of public policy, and now you're in the academic arena. But as far as I can tell, in a field where the link between what you're studying now, what you're active in now, and what you've done before would make an interesting explanation.
Well, I thank you for starting on the personal. I came to MIT, as so often happens in life, by happenstance.
Okay.
A professor at MIT knew of my work in public policy, particularly at the Commodity Futures Trading Commission, where I chaired that for post-crisis, post the 2008 crisis. Simon Johnson knew of that and asked me would I consider coming up to MIT and helping out something over at the MIT Media Lab called the Digital Currency Initiative.
Okay.
A group of computer scientists and research scientists who are really at the forefront of some of this technology. And of course, I'm there now, so I got intrigued by it. And it really, I thought it fit in well with my life's journey. 18 years at Goldman Sachs in a variety of advisory and trading at the firm. A bunch of years in the Treasury Department, and then with Paul Sarbanes doing something called Sarbanes-Oxley, which is reform the accounting industry. And then post-crisis trying to bring some transparency to this vast derivatives market, a $400 trillion marketplace called swaps. I thought it fit in, but what I didn't understand was that the folks at MIT thought it fit in too. They wanted somebody who, as they said to me, was of finance but not beholden to finance.
Okay.
And so that's what I've been doing. And you'll be asking me questions about the technology, but the interesting thing about the technology, it has the potential to be a catalyst for change in a lot of the world of finance and the broader economy. I stress the word potential. It's not certain to happen. And so I found it incredibly invigorating, particularly to be at an institution like MIT. I mean, you're at Yale, so you know. I mean,
Yeah.
It's just a hotbed of activity.
So that's a great introduction in a way. Let me one other really introductory question. When people talk about Bitcoin, let's say, they seem to embody both Bitcoin and blockchain. So my first question is, differentiate the world of cryptocurrencies and the world of the technology that supports it. How do you distinguish between these two concepts, and what is their connection?
All right. With permission, can I talk about pizza?
Yes.
All right. So the internet came along based on a lot of technological innovation, really starting in the late 1960s and 1970s. But when you got into the early 1990s, businesses wanted to start to use this new technology. The World Wide Web had just come about 3 or 4 years earlier. And in 1994, Pizza Hut was the first company in the US to try to offer something online. They called it PizzaNet. And they were offering pizza. But guess what? To pay for your pizza, you still paid at the door. You used the internet.
To order it.
To order it. Amazon, eBay started in 1995, but no one had figured out how to make payments on the internet. There were a lot of efforts in the 1990s to try to figure that out, all of which basically failed. But in 1996, some folks figured out through the means of cryptography how to protect the internet. And to this day, most of us make payments on the internet, and we put in our information, our credit card information, or our PayPal, or our Venmo, or other information, and it all seems to work seamlessly. But in 2008, a paper was published under the name Satoshi Nakamoto. We'll get back to Satoshi later. But Satoshi's paper basically went back to that earlier question. Could you move value on the internet without having central authorities like central banks that I know you've done so much research on? And could you do it without commercial banks? Could you do it without credit cards? And Bitcoin was the first application of that underlying technology, blockchain technology. In the short version, blockchain technology is a way to move data and information on the internet in a decentralized way, but most importantly to move value, because what Satoshi solved for is that you couldn't spend something twice. And that was a really important thing. The internet, you can send information and email in a decentralized way, but it's okay if you send the same email twice. You don't want to spend money twice. And he solved that with the underlying technology blockchain. Bitcoin was just the first use of that.
So today there are many cryptocurrencies, right? There are many, let's say, Bitcoin wannabes. But they're all operating with the same blockchain technology, am I correct?
They are all operating using something called blockchain technology, which is a chain of information in blocks, thus the term blockchain. It uses cryptography, which is a way to basically mask data, to oversimplify. And importantly, they all use a decentralized set of computers that don't necessarily trust each other.
But the blockchain technology is the backbone for Bitcoin. It is also the backbone for Ethereum. These other cryptocurrencies, there are quite a few of them.
That's
now.
right. So there's about 1,600 cryptocurrencies. Some people call them altcoins, alternative coins if it's not Bitcoin. About collectively, they're worth about $200 billion. But anybody watching this, they could be worth $400 billion when you're watching it, or only $50 billion. They're highly volatile. And about half of that value is Bitcoin, and about half is the other 1,599.
But it's all on this. It's the same technological
Yes.
base. So let me ask you this: we hear a lot about blockchain, and we hear that it is not only the underlying technology for these cryptocurrencies, but in fact, businesses are using blockchain as an accounting mechanism, as a way to keep track of data, in many other applications. So where is blockchain now in terms of how wide it's being used? So let me give you a multiple choice here. Is this an experiment? Option A, is this an experimental technology in which there is a lot of work being done, but people are very skeptical that it's going to reach prime time? Is this one in which people have reached that conclusion, but there needs to be a lot more investment and practice? Or am I, three, am I underestimating the fact that actually blockchain is here? It is being used in a widespread way, if not just for currencies, but for other things. Where on the spectrum of utilization and making a big difference is blockchain technology today?
So I would be closest to B, but not exactly B. So I'm neither a blockchain minimalist or a blockchain maximalist, and nor am I a Bitcoin minimalist or Bitcoin maximalist. But I think that it's at best in adolescence.
Okay.
It has a lot of potential, but it also has some very real technical, commercial, and public policy constraints. Technical, it's not that scalable yet. Its performance is good, but you can do limited number of transactions a second, less than 100 a second, and Visa can do maybe 100,000 a second, order of magnitude. The commercial use cases, there are not any live large-scale commercial use cases yet. I mean, there's some fun ones, something called CryptoKitties, and there's this Ethereum network that a lot of things have been built on top of, but no large-scale broad. Bitcoin's the largest scale, the cryptocurrency. And thirdly, all of this, to be successful, I believe, and others do as well, needs to more fully come inside the public policy framework. And there's still a lot of illicit activity, and whether it's state actors like Russia and Venezuela trying to use Bitcoin to avoid sanctions, or drug runners, or people avoiding securities laws. But I would say closest to B, we're kind of in adolescence.
I know I have had the pleasure of reading a lot of the talks and presentations you've been making, and
You're kind.
you always emphasize the need to bring cryptocurrencies into the public policy framework, into a regulatory framework. Could you just cite a few examples of what has to happen in order to give these cryptocurrencies the opportunity to be used very seriously in the global financial system? When you say public policy framework, just give us one or two examples, so we understand the order of magnitude.
And I want to say, every technology that's come along, whether it was the locomotive, steamships, telegraph, and certainly the internet, at some point in time, we grappled as a society, where do we fit this in to our public policy frameworks? How fast can the railroad go? And can the internet be untaxed or taxed? In terms of cryptocurrencies, like Bitcoin, I think it really is relevant that we still collect our taxes and we ensure that there's not a use of a new type of currency to fund terrorists, for instance. There is secondly, there's a new form of fundraising, crowdfunding, if we can like to call it, called initial coin offerings. And not getting into the details yet, it's raised over $20 billion. So it's starting to compete with venture capital to raise early form money. There's a debate, should this be within the securities laws or with outside? Here in the US and Canada, it seems we're leaning that it will be inside securities laws, and other countries is leaning outside. But if it continues to grow, I think investors will need protections in many countries, not just the US. So those are two examples.
Assuming, well, let's see if you agree with this, but when you talk about bringing something into the public policy framework, and even just take the internet, we're getting to the issue of sales taxes. But there are many other issues, right, with the internet that a lot of people would say it is outside the realm of public policy framework. The internet's been with us for quite a while. And these issues have become so complex within our country, let alone among countries, that I don't think it would be an exaggeration to say that if it will take at least the next decade, at least, to create a public policy framework for the internet that so many people are clamoring for, so many governments are clamoring for. And there are very, very different views. The Chinese view of a public policy framework is very, very different from what our government would say. So when you think about the cryptocurrencies, what are we talking about in terms of an evolutionary period in which even, an optimistic, that you could say, this won't be primarily a device of people who are trying to operate in the shadows or operate for illegal purposes, but actually it will be a very legitimate alternative to the other digital currencies that exist. I'm trying to figure out whether we're talking about 2 generations or whether your view of technology is it moves much faster than that.
Well, I think the technology moves faster than policymakers and legislative branches. That's been true for centuries probably, but it's even more true now. And when the internet came along, really in the early to mid-90s, Congress got involved in the Telecommunications Act. There was a lot of things that happened, but you're right, 20 years later, it feels like it's still an ongoing journey.
Because the internet itself has evolved in terms of what it's done.
And the commercialization. So you take a technology and you layer on top of it a big commercialization, and society starts to shift, like the social networks, the Instagram and Twitter and Facebook and Google. Back to cryptocurrencies. I think we are at best kind of like the early 90s in the internet. And I think in most jurisdictions, tax authorities and securities authorities have spoken, but legislative branches haven't, and so forth. I think we're 3 to 5 years that will just get us to like the internet was in the late 1990s, but 3 to 5 years to just kind of sort through the big early questions. If this takes off, there'll be a lot more questions later. If this thing all dies, then of course it will just be, it would be for the history books. I would also say the blockchain technology, not the cryptocurrencies, the blockchain technology is already being looked at and used on Wall Street to help lower the cost of their back office. They haven't fully adopted, it's not big enterprise solutions yet, but it has a real chance to lower the cost of payments, or if somebody wants to remit something cross-border and not be charged 8 to 10% to send a MoneyGram or Western Union remittance back to a foreign land.
So when all is said and done, let's make an assumption that blockchain continues to expand. More money is going into more venture capital, and investment from big institutions are going into both blockchain and cryptocurrencies. And it more or less comes into a public policy framework. And so it's far more along than it is now, both of them, the cryptocurrencies and the blockchain. How is the world better off? What is, after all of this, what can we say other than it's more technologically sophisticated? Let's put it in categories. How are governments better off and how are individuals better off?
So blockchain technology, I'm going to sound a little bit like a maximalist now, but blockchain technology...
Well, I'm asking you to be one.
Yes,
I mean, for the sake of this.
Yes. Blockchain technology has the opportunity, the potential to do 2 really important things. One is to have data and money stored and moved without centralized authorities. So it addresses the cost of trust. And right now, we trust not only in central banks, but in commercial banks, but we also trust in large institutions like Facebook as well, to have our data or control our money. And in a decentralized way, the economy could be more resilient. It could actually withstand shocks better. And individuals could have more control of their data rather than saying, well, I'm handing all this data over to a Facebook or to Apple. I might have more control of my data. It might sound simple, but blockchain technology in its raw potential could allow us to control it because it's, in essence, a way to store data and control that data, and with cryptography to actually mask it and maybe only permission it to those who I want to see it. And on the money side, it could lower some of the costs of the back office of Wall Street, but it might also lower costs for individuals. And that's going to be interesting. Will it only lower costs for the providers of financial services, or will it actually lower cost and give new services to individuals? The greatest potential would be if it actually gave individuals more services at lower cost.
So you're really talking about two things, which are very big conceptually anyway. One is trust. I guess trust and resilience. That if in let's say in 2008, there had been a lot more trust, then the financial system might not have frozen up, right? Because suddenly nobody trusted anyone else. And the other is the lowering of costs, both the back office costs and the cost to individuals of transactions. So these are not insignificant.
They're not insignificant, and I don't think it's a coincidence, but I said I was going to get back to Satoshi.
Yeah.
So Satoshi Nakamoto, who we don't know whom this is, whether it's a male or female or a group of people, published the important paper on Bitcoin on October 31st, Halloween, 2008, right in the middle of the crisis. It had been 14 years since Pizza Hut tried to sell that pizza, but remember, there was another approach.
Right.
But it was in the middle of the crisis. And some, I wouldn't put myself there, some think that Bitcoin and the blockchain could completely do away with commercial banks or central banks. I think we'll have commercial banks and central banks for quite some time. It's hard to predict for centuries, but I think we'll have quite some time. But it could actually, the maximalist would say, the cost of trust, we right now spend 7.5% of our economy on the financial sector. The world still has 1.7 billion unbanked people. Could we have more financial inclusion and spend less on finance? And blockchain could be part of that mix.
Final question. So we all read the newspapers, and it was a couple of months ago we saw Bitcoin. This was the price was rising, and now it's falling. What should we be thinking about when we read the juxtaposition of these very weighty concepts and potential benefits, and all of the whole framework for technology and public policy, the juxtaposition of all of that, and what looks like a speculative bubble every single day? How do you reconcile the two?
Well, one, I don't think it's that weighty. I think just this is a new technology that could lower the cost of trust and give individuals more control of their data and movement of money.
Well, those are big things. I mean, they're very core to our existence.
They're core, but they're easy to understand.
Yeah.
Even if you don't, as most people do, not understand the cryptography that's underneath it. but I don't understand how the carburetor works either.
Me too. Oh, the television.
So it's sometimes it's all right to rely on others, but there is also this investment, this speculation in this commodity called Bitcoin. And Nathaniel Popper of the New York Times wrote a book called Digital Gold. And that's in many ways what it is, that there's this speculation in gold and metallic precious metals have gone through speculative bubbles. I look more to the underlying technology and what social good it can do, what economic good, the movement of money, whether it's Bitcoin or some other cryptocurrency. That is part of the technology. It creates some incentive system to make the technology work. It doesn't have to replace the US dollar or the euro to be successful. The blockchain can be successful. And frankly, whether the whole market's worth 50 billion or 500 billion or even 5 trillion, it's relevant, but it's not that relevant to the underlying technology. I mean, right. Of course. I would note gold's worldwide value is about $7 trillion. So this is still a lot smaller than the real gold. And there's not much use of the real gold either.
I'm thinking about, you started out with the railroads. There was massive speculation in railroads, right? And huge number of bankruptcies. A massive amount of money coming into the U.S. from abroad, investing in the railroads.
Right, in the late 19th century.
Right, and then there was consolidation. And a lot of people lost their shirts, and a lot of people made a lot of money.
And similarly in the internet started to get commercialized in the early to mid-90s. Again, Amazon and eBay started in 1995. Public policy sorted initial things out in the late 90s. And then we had that big bubble and the big collapse.
Yep.
But out of it, we all have gotten a richer, more informed, more connected life through the internet.
That's a great place to stop. Thanks very much.
All right.